We are currently here at the Money Summit, and we have the absolute privilege of having the Deputy Minister of Finance, Dr. David Masondo, here today, and we can get him to answer a couple of questions about what's currently happening within the markets and within the economy. Now, Deputy Minister, when you were on stage, you actually touched on some amazing topics, and specifically around making the cost of doing business within the country a lot more affordable. And within that, you spoke about certain trade deals that we currently have with China and so forth. But we also know on the other side of the world, we are currently being struck by other tariffs being implemented on South Africa from countries like the US. And how are we planning on combating that and working through all of that so that we can actually still decrease the cost of doing business and keep inflation within your targets?
Firstly, we continue to have a conversation with the United States of America under President Donald Trump, because for us, the US market is a very important market. In order to grow our economy, it's important for us to have access to that market so that our businesses in South Africa can sell what they are producing here in order to generate better returns and reinvest that back into South Africa and employ more people. But as we do that, and this has been the strategy of South Africa to diversify our trade relations, not only with Europe and the United States. Those are important markets, and we must maintain our relationship with those markets, but we also need to diversify our relationship, our trade relationship with other jurisdictions such as China. I mean, we've just concluded a trade deal on stone fruits with China, and we do think that will contribute towards aiding and growing our economy. But we also have to deal with the domestic constraints on our economy, identify things that are making it difficult for our businesses to thrive, whether it's regulations, whether it's inputs. We've successfully, or we've made significant progress insofar as energy is concerned. Load shedding intensity is almost absent. It's 155 days today without load shedding. And freight logistics, it's an important input insofar as our businesses are concerned. We've said it's not correct for one monopoly to be giving prices to the users of Transnet services. We therefore have to bring in competition. As a result of those reforms that we've been undertaking, 12 companies are going to be operating on our rail infrastructure, on our rail network, to compete with Transnet. And we know what competition does. It brings prices down, and users of the freight logistics will benefit, and those benefits will enable them to grow further and employ more people, set the right material basis for us to generate sufficient revenue to deal with our fiscal imbalances in South Africa.
Absolutely fantastic. And from a load shedding point of view, I think I speak for every single South African here today, where I say thank you for the job that you've done, because without load shedding, it has been absolutely fantastic within the country. But, as we are at the Money Summit, let's talk a bit of money here at the moment. And I've attended some of the other conversations, some of the other rooms with some of the investment firms that are here today. And the primary topic that everyone is talking about is capital leaving the country, because of the fact that, people are not investing into the JSE anymore. People are not investing into local equities anymore. And a lot of that money is going into offshore equities. From a government perspective, or from a government point of view, how can we go about making local equities, if I can put it in such a way, sexy again? So that people will start investing into our local stock exchange, into our local companies, and grow our local economy and stop sending South African money out of the country.
I think reducing the cost of capital in South Africa is very, very important. So our plan, path to keep our debt at sustainable level is part of that equation. Because the cost of capital is constituted, amongst others, by the risk-free rate. If your bonds, government bonds, are very high, the investor in South Africa will say it's a risky jurisdiction and therefore I need to require more return on that investment. And there's a limit to how much return you can ask. If the risk increases, the required return, expected return also increases, there's a moment where you say as an investor, no, this jurisdiction can't afford this return and therefore I must go somewhere else. And we know that the risk-free, it's a benchmark. Any investor in equities will say, my floor price is a risk-free rate and above. So the equities suffer if we don't keep our debt at sustainable level, because high risk, it's high interest rate, it's high yield, and there's a limit on what you can get. And if the economy itself is not pumping, you're not able to attract equities, because any investor who's sitting out there, seeing that the profitability, the GDP is not performing, they will say, no, that economy is not going to give you the necessary return, the profitability of companies, because you invest in order to get better returns. And one of the indicators of better performance of a JSE is the all share index. And if it's performing well, share prices are good, everyone will be interested in those stocks. But the underlying performance is your actual economy. And it's for us, for that reason, ourselves as government, we said it's important to deal with the structural constraints that are making it difficult for this economy to grow. The supply of electricity, freight logistics, importing of skills through visas, critical skills that we require, sorting out water, dealing with crime. Because as you grow that economy, the demand for capital will be matched with the proper supply, because it becomes rational for owners of capital to invest in such a growing economy, and in an economy where the risks measured by your government bond are also low. So we're trying our best at a macroeconomic level and at a micro level to get our economy on the right path.
Doctor, thank you so much for your time. I do know that it's very precious. And for all our traders watching this today, you have heard it straight from the person who imposes each and every one of those policies that affect our investments. So have a great day further. Thank you so much.